Hello traders, welcome to the weekend update here for December 3rd, 2023. So it's been almost 1 year or 2 days, over 1 year since I started this service back in December of last year. Now, we had a very good run out of the gate. Performance continued to be pretty strong throughout the year. Keep in mind that the general purpose for the service is we will have on anywhere from 3 to 5 trades at a time. And those trades might have, at least starting, they usually have about a $2,500 max risk associated with them. At times, the max risk might get higher in some trades if we don't have on a full load. So I try to keep the overall risk in that 12.5 range. So based on that, even though there's been a pullback here at the end of the year, and of course this pullback has been due to the very hard and fast run up in the markets, catching our butterflies to the upside, which is the worst case scenario for butterflies and delta neutral trading, that has caused a dip in equity down to about just a little under 14,000. So still over 100% return in a year, but obviously a little bit of a pullback here recently. Now, we had one more trade that expired this week at a small loss. It was about a $120 loss. Again, the market just outran that trade over and over and over again. We adjusted it consistently, but ultimately it expired here on Friday on the 1st and again was a small loss. Now from there, what trades do we have open at this point? And then we'll take a look at the markets themselves and the upcoming expectations for the markets. Okay, so these are the current open positions that we have. I've got the Google wheel strategy, which is chugging along nicely. It's up a little over $700 or so. In this one, we're currently long 100 shares of Google, which this is a bonus trade or a wheel trade that many students asked me to make so that they could see that process. So I'm doing that here. That obviously does not fall into the overall parameters because 100 shares of Google uses up the bulk of that buying power. But the rest of these do. So this particular one, SPX, we have about $1,500 in open risk on it, but it's quite a ways from the market. This expires in about 2 weeks. I am working to try to roll up the wings on both sides of this. In other words, raise the potential profit on the upside here, reduce the potential risk on the downside a little bit. Problem is we're so far from the market on this that the bid-ask spreads are high, just not getting any fills on that. So this one may end up expiring about where it is here in a couple weeks. So we'll see. I'll try to maybe do some adjustments on this, but it can very easily just kind of play out and retire here where it is. This is one that we've had to chase quite a bit. So this trade was put on when the market was much, much lower, and we've chased it. I do feel like right now, because there's quite a bit of time left on this, about 3 weeks, I do feel like this trade can be worked back into a level of profitability. The thing we really don't want to happen now is a whipsaw where the market has run up considerably, then all of a sudden, for whatever reason, it plummets. That would be kind of the worst case scenario here, now that we're in a position to handle some upside moves and or a stabilization of the market. This particular trade here, it's great. I like the positioning on it. Probably do a small adjustment in this, but this thing doesn't expire for quite a ways yet. This has 60 days left on it. So over time, once we're comfortable that the market is holding up where it is, I'll raise this right wing. And then at some point may start raising the lower wing here as well. But I'll start with just raising the right wing. So if the market is anywhere up here, we'll continue to work this into a little more, a little higher profitability, not unlike this trade right here, kind of the same concept. This was an earnings bonus trade here, and this is in crowdsource. Now, I've rolled this At the end of this trade, there will be a review that I'll put in there where I'll do a complete summary on this, because it's a good educational trade for earnings calendars. And I do think that this one, likewise, maybe this week it'll start creeping up. It'll decay up into here into some level of profitability. Have to see on this one how the market ends up moving on it. But right now, my expectation is that the market will largely stay in a range on crowd and allow this to decay. If it does go against me to the downside or the upside, the long strike in this doesn't expire yet for another week. So I can even roll this thing out again, taking in more premium on that specific trade. So that's kind of the game plan on these. I may look to add a new trade this week. Ideally, I'd like to get a little bit of a down move, a little bit of volatility come into the market before doing that. That always makes for a lower risk, higher reward butterfly. And December gets pretty quiet, so there's not going to be a great deal of activity here in December. Most of the earnings trades are already come and gone. And again, the market tends to, a lot of people are on vacation, etc. So there tends to not be a lot of activity. Some years we've had massive activity in December, but this year I'm kind of expecting maybe a quiet period. So not expecting a whole lot of trading and or adjusting here in December. So let's just take a look at our market here. So let me get up my drawing tools. So what's happened here, unfortunately, is that, let's see, did I put on the drawing tools here? Let me go back. And yep, I did. So what happened here is, we got to a couple different points where I was expecting there to be a little bit of resistance. And while there was a few days of resistance here, we really quickly just blew through that and then just took off from there to the upside. So, and of course, we had this massive move down and we adjusted for worst case scenario, because when we came down, we broke through this area. So the thinking was, oh man, we're in for it now. We're coming all the way down into here. And then almost instantly, based off some Fed news, we had a reversal. Now the reversal I would have expected to come to here, maybe to here, and it just continued powering higher and higher through everything. So bottom line is we are now at our prior highs back in here, which in theory would be a strong resistance area as well. But let me just change this to a monthly, and we can see that our old highs are actually higher than that. So if we come back and take a look here, back in October of 22, we had all-time highs here in and around the 4,800 range. So, it seems, again, very odd to me that with our markets being as, how would I describe it? Interest rates are higher than they were a year ago. There's a lot of political things out there that weren't there a year ago. There's, war in Ukraine, which was there a year ago, but also, of course, Israel, the issues going on there, presidential election. There's so many questions that the fact that we're back up here again just seems a little bit odd to me. Particularly with interest rates being higher. I know the expectation right now is that interest rates might be heading lower, and I think that's fueling a lot of this. It's also important to note that a lot of this up move is being fueled by a small group of AI stocks. And when I say AI stocks, I'm talking big names that are getting involved in artificial intelligence and or machine learning. That's your Apple, your Microsoft, your Nvidia, Google, Amazon even. So, with that particular group of stocks, that's been a lot of these moves, is those particular stocks that are just powering higher and higher and higher. And of course, they make up a vast amount of market share, which are pulling the markets up in this process. So if I were to look and try to explain why and how we're getting this type of massive move and a potential breakout higher, that's kind of the only thing that I can put together to maybe put that stuff together in my head. Now let me come in also here. Let me go back to a weekly chart, and I'll go to the VIX, and let's just take a look at our VIX readings here. So our VIX readings after that, spike that we had a month and a half ago, our VIX readings have just dropped to all-time lows. I mean, we're back down here around the 12 mark in VIX, extremely, extremely low. So that's telling me that there's not much fear in the market right now. There's not a lot of people out there buying protective puts. So the general market consensus, if you will, is people aren't buying insurance. And when they're not buying insurance, that means essentially that a lot of people are feeling like, yeah, I'm pretty comfortable with where the market is. So even though I personally have some questions and reservations as to why we are where we are, the general market consensus is that, yeah, we're kind of comfortable with where we are. So as any of you that have taken the deep dive butterfly class know, delta neutral trading, it's kind of a dangerous proposition to go out there and put on essentially different types of credit spreads or credit type trades, condors, butterflies, when volatility is so low, because a spike in volatility, particularly an initial spike in volatility like you might see here, is going to have a negative impact on those butterflies. So where a butterfly might be set up to handle a sizable market down move, let's just take this one for example. If the market were to drop down on this, down here to 4,500, so it drops 100 points, the S&P drops 100 points. Let me just enlarge this and kind of show you what volatility will do to this. So under normal circumstances, you wouldn't expect that a 100-point drop. It looks like, okay, this trade might be down maybe 80, 90 bucks at that point. It's currently down 40. So, that would not be a big deal. However, when that happens, volatility also picks up. And when that volatility picks up, that will have a much larger impact then on this butterfly. So not only are we going to get that down move in the market, but volatility picking up is going to have a negative impact on the butterfly as well. So for those reasons, it's always best when volatility is lower to, stay a little lighter. I don't have as many positions open. Even personally, I don't have nearly as many positions open when the volatility in the market is lighter like it is right now. I've got a lot of cash on the sidelines. I'm waiting for a pullback and an increase in volatility, and then I will start layering in more delta neutral trades at that point, because my reward to risk will get much better at that point. I can enter these trades for much less money. And where right now, for example, I've entered this butterfly, or close to a butterfly, I guess technically it's a broken wing condor, but I've entered this in a 2 lot. Well, if you got a good market pullback and a spike in volatility, I could probably enter a 3 lot that would have a similar reward to risk. I could get 3 of these that would maybe only have about 2,200 or so in risk. And the reward on these might get as high as maybe 10K or something in that range. So it's a much higher reward to risk ratio when I get into these when volatility is higher. So as a result of that, my intent, if we come back here to SPX, actually I'm going to go to SPX then to RUT very quickly. So with SPX being at all-time highs, volatility, the VIX being as low as it's been in quite some time now, I'm not in a rush to enter a lot of new positions. And if we take a look at RUT, we have a very similar thing in RUT. RUT has rallied very hard here from 1630 up to just shy of 1900. That's a very significant move. And, while we're coming into what might be considered a resistance area here, I think a case could be made that we could drag, this line maybe up into here and call that a potential resistance area, maybe even this to some extent a potential resistance area. Probably, yeah, I think that makes sense to consider this maybe resistance. But the market just simply hasn't been paying much attention to resistance areas over the past month and a half. It's kind of been blowing through them based on news. So that's the weekend update here for December 3rd. Our markets are very bullish right now. And as a result, we're kind of scaling back because of the holidays and just lighter trading overall, and don't want to have a lot of positions on when volatility is as low as it is, given the fact that the types of trades that we do are best put on in higher volatility markets. So that's it for this weekend. Take care, everyone.